Oh, good shot.
Oh, come on, baby. Oh, wow.
Oh, yeah. Look at that.
This is Wes. Now, Wes is my go-to insurance broker that I use for everything. He's also a pretty dang good golfer.
Because I'm on camera.
And then there's me. Now, today's video is actually me and Wesley just taking you on golfing. We're going to be talking through some of the insurance market and what's happening with homeowners insurance in California and how much it can really affect what's going on. So come golfing with us, hopefully get a few questions answered, and have a good time watching.
Don't you need to not focus? Isn't that like
Yeah,
the thing
well,
you were
that's a good
saying?
point,
Like,
'cause
hey, if you were not thinking about the shot,
I just hit that so good. So
that's beautiful.
we should just keep going.
That was a great shot. Speaking of that, like what, obviously, like I've been dealing a lot with like fire insurance recently. What are some of the biggest factors that affect like the actual price of the policy?
Fairplane's actually like redone a lot of their maps. And so literally it's just the more remote that you are. Like I have one
Really?
in Placer. I have a current quote in Placerville. They're not within 1,000 feet of the fire. They're probably within 2 miles of a fire hydrant or fire department.
Woo!
Holy smokes. Good job, Jake. That's awesome.
Thank
See,
you,
we
sir.
both need it, I think. But they're probably within 1,000. No, sorry. They're within 2 miles of a fire hydrant or fire station.
Okay.
But they're not within 1,000 feet of a fire hydrant.
Okay.
And so their premium that I quoted is like $9,000 a year. If they were within 1,000 feet of this fire hydrant, it would be $4,000 a year.
Wow.
That's a crazy
So-
one. That's not every. That's not dependent. That's dependent on zip code. That's dependent on the area. They've gotten more exact in their locations of what they're willing to charge and stuff.
Yeah. Holy cow.
But that was one I was like, whoa, that's a big one. But usually it's just the more remote the property is, the fair plan is going to be more expensive. Like, there's some areas in West Roseville, honestly, that like some people might have to go through the California Fair Plan for, even though, like all those new bills are right on the border of all these insurance maps that are like brush fire risk.
Yeah.
But their fair plan premium maybe is like $800 a year, just because.
It's low, but it's close to things, so it's
Yeah.
not super rural.
Yes,
That makes sense.
like Auburn, most premiums are going to be between $3,000 to $5,000 a year. Like Auburn is, it could blow up at any moment. To be honest, there's like multiple canyons right around it. And
Perfect.
Yeah, no, exactly. Like that's why their insurance is high. Like
Right.
there's a high risk. Like no one thought these Palisades fires like could happen. Like there's no way that we're right on the coast. Like nothing's gonna burn down. It's so dry. It's so
Yep.
like it just takes the right wind and the right fire, and most of these places are gonna burn down.
Yeah, no, I get that, absolutely. Well, that's like, yeah, it's just interesting. It's interesting to hear more about it. Because, yeah, in general, I feel like I can I don't quote, let's clarify that. I can estimate for my clients if they're in Auburn.
Like sometimes the fire hydrant doesn't mean anything. So it's literally just dependent on the location. That was just one I noticed. I was like, whoa, sometimes this has a huge impact.
Yeah,
So
that's interesting.
we need a birdie right here. Come on. Come on. Oh, I pulled it. Come on, get right. Nope. Oh, way over. Oopsie. That'll be fun.
So, something I've noticed a lot recently too of like when I'm sending you clients, there's a lot of insurance companies that seem to be bundling like home, auto, all that sort of stuff. I guess, I don't know if you know this, but like, can you feel like you can explain the significance of that, of like why companies feel like that's so
Important.
Yeah, like obviously it makes sense.
What are you? All right, you're way down here. Jeez. I will say yes. So right now, a lot of obviously a lot of insurers in California don't want to write a lot of home insurance.
Right.
They want to write the auto insurance. So they're saying like, we'll be willing to write the auto insurance if we get the auto. We want to kind of like we want to have both sides.
Okay,
When
so
you
we'll
think
do
of-
the home if we get the auto, but we won't do the home alone.
Yes.
Okay.
And so it's a lot of these carriers, they don't want to be, you want to diversify risk. That's even on the financial side. You want to diversify your
Right.
portfolio. You don't want to be over leveraged in all home insurance
Yeah.
or over leveraged in all auto insurance.
Oh, that was
It's all right.
so fat.
It's all right.
You were talking.
Yeah, I'm sorry. Yeah, but you don't want to be leveraged in all auto insurance either. So, or all home insurance. So they want to even their books out. They want to, and so, yeah, they're willing to take on the risk of the home insurance. So they're willing to write the home insurance, but they want to have the auto. So,
Okay.
that's where that kind of meets. It's honestly like what is recommended for most clients, anyways, because it's going to save them money on the auto insurance,
Right, because
anyway.
they bundle it, like Geico bundle and save, right?
Yeah. Oh, we don't talk about the green lizard. Hey, we haven't lost one yet.
It's true. I can change that, though. Real quick here.
No worries, you'll just pound it into the bunker. Or
No, I'm
over.
just right at the bunker. I'll be okay. Passed it.
Shot. Good shot.
Thank you, sir. Homie Scheffler.
Mm-hmm.
Interesting one. Are there insurance advantages to buying a new build versus an older home?
100%. I would say
Really?
Yes, 1,000,000,000%. Most new builds are going to be in areas that are not super fire prone. Plus, the premiums are going to be about, let's say, like compared to like a home build in 2020, the premium is going to be 800. If it's even like a 3,000 square foot home, maybe $1,500 a year. Like a large home or a smaller home, like I have some that are $600 a year. If you look at the same house that's built in 1960, $2,500.
Wow.
So yeah, most companies really like new builds.
That's actually super interesting.
The hard part is most new builds are built like right on the edges of these like old fire maps that are used for like brush areas.
Yeah.
But new builds, like I want to buy a new build. Like buying an old house I have an old house. Like things can go wrong really quickly. Just because it's old doesn't mean that there's something wrong with it.
Yeah, but like, it's funny because I always feel like an idiot. Because like everybody has their own place that they work and they stay there.
Yes.
And I don't know anything about insurance. Like literally to the point where people are like, oh, does this cover this? And I'm like, I couldn't tell you. Like I literally could not tell you like what's covered, like what the lender requires. I have no idea. So that was kind of what I was thinking, was like looking at this of like, hey, what does a homeowner's insurance policy actually cover? When is it like they look back at you and they're like, oh, that doesn't work for this? Like I know some of that stuff was happening with the fires.
Oh yeah.
Was like dropping policies and stuff like that. Like, so I guess give me a little background on like what does that look like for you?
What
and
does
like,
homeowners cover?
Yeah, what does homeowners cover?
With not being so technical.
Yeah.
Yeah.
Yeah, at a 6th grade reading level.
Yeah. So.
Right.
So home insurance, I would say, covers. It's what's called this, like, in the grand scheme of things, most home insurance policies are written on the same policy, no matter if you go through State Farm, you go through USAA, you go through Mercury, etc.
Okay.
It's the same HO3 policy.
That means a lot.
Covers everything except for that what's listed in the exclusions on the policy. So the exclusions are probably more important than what is like obviously fire, wind, water, lightning, smoke, theft, liability. Those are all things that are covered. Very much like sudden events, sudden and like
borderline like act of God, like stuff that you didn't expect to happen. That type of
yes,
stuff. Like,
and it's something that would be like attributed to like one thing that happened. Like it's not like something that happened over time.
Yeah.
Like your roof just is old and you need to replace it.
Yeah, it's like leaking as you're going, and you're like,
Yeah. You need to fix it.
You didn't do the maintenance. Like,
Yeah.
I mean, similar to. Train is so loud. like normal home maintenance costs. Like, you know, you walk in and you make an offer and people that just didn't do what they should have done on the house, like now the roof is leaking and they're like, we don't want to pay for it. And it's like, well, it's kind of your own dang fault. Like, you know, you should have fixed it.
Exactly. So that's one of the conditions is pride of ownership. Like, you show that you like care about the property, right? One of the exclusions on these policies is neglect. So if you just don't take care of your property, why should an insurance company have to pay out if you don't care about maintaining it?
Yeah, which makes sense. Absolutely.
The other exclusions would be earthquake damage, flood damage, like flood as like a natural disaster type of flood. You'd have war, nuclear hazard, governmental seizure, like crazy things.
Yeah.
But yeah, it's like if the utility company caused a situation that caused a loss to your home insurance policy, the utility company would be responsible. So there's some exclusions, but that's like the main ones like that people might be worried about is flood damage, like a natural flood.
Yeah.
Yeah, and that's like on your side, like you.
Right.
A bank is not going to write a loan on a policy that doesn't mitigate the risk. So usually if there's a high enough risk, they're going to require flood insurance. Or like in the Bay Area, they're going to require earthquake insurance. So
yeah,
everybody's just covering their
bases.
Yeah.
Nice shot. There you go. Now I'm just going to blade this and just shoot it straight to the next hole.
Well, that would be somebody's house. We don't want that.
Well, not the way I've been hitting recently, so. Perfect. All right, let's try that again. We'll just take that one off the camera.
There you go. That's great. There is coverage for property damage to others. So, you know, if you hit a golf ball into a window, there is coverage.
Okay, speaking of that, if you live on a golf course, usually there's an HOA to kind of cover that, correct?
No, well, it depends, but not really the HOA. It depends what's here first.
Okay,
if the
yeah,
golf
so
course
if the
is here,
houses are
if
here,
the golf course is here first, or if you buy in a golf course community, you're kind of assuming the
risk.
You're assuming the risk. If the golf course comes after you own it, then that's another story.
Okay.
So then sometimes like people will pay to replace a window or fix a window, but
yeah,
there's like, especially on like renters policies, or there's what's called property damage to others. It's covered.
Yeah, because that's always been something I'm like, where did I play? Only place I've ever been truly embarrassed playing golf, I think it was Whitney Oaks. Ooh. And I smashed a house. And I got real nervous there for a minute.
You're not the first person that
Oh, I know I'm not the first person.
hit that house. Yeah, it's nice to live on a golf course, but you obviously assume the risk.
Oh. All right, well, realistically, that's all my questions, and we just keep talking. So let's do a quick sign off and then be done with this and actually enjoy the last little bit. So hope you learned a bit from Wes. He's here local and would love to help you out with some insurance needs. And I think that's all we got today. Thanks for watching, and bye.
Well, thanks for watching today. Hopefully you enjoyed that video a little bit more than my other ones. And if you have any questions on insurance or anything for Wesley or me, please make sure to comment below. If you feel like you liked the video and you actually are getting some good use out of it, hit that like and subscribe. I post content like this quite a bit, and am going to be trying to have a little bit more fun in my videos and hopefully teach you even a little bit more about the mortgage industry. So thanks again for watching, and I'll see you soon.